Hey, let's go live. Okay, welcome everybody. I'm here with my good friend Sami Abusaad. My name is Michael Camo. I'm director of content for T3 Live, and my friend Sammy's in a very very good mood today because trading's been going well for him. He had a great call on NYCB yesterday. We're going to talk about Bitcoin because Bito's been a huge hit for Sami, and we're going to get into all that's going on in the market ahead of the non-farm payrolls report tomorrow, even though Sami doesn't care about the non-farm payrolls report. Okay, so Sami, so this bull market just keeps going and going and going. We hear a million reasons why it's not supposed to go down. Now, I've noticed in the Strategic Swing Trader newsletter, I've been reading it for I don't know how too many years now. I've never seen so many long positions inside the newsletter. So why have you been like so aggressively long when everybody else is
Look at
saying no, this can't go on anymore?
look at the market. It's grinding up. That's sustainable. That's gonna last until the trend accelerates. When it accelerates, starts to move really fast, then it becomes not sustainable. But as long as it's moving up in a tight manner like it has been, this is when you want to be fully invested in the market.
Okay, so are you? So now, I'm going to ask Sami a question I've asked him before, but I just want to make sure that everybody else out in the audience kind of understands how he's thinking. So, are you looking at any of the news, the economic data, the State of the Union tonight, NFP tomorrow? Does that play any role in your trading at all?
Absolutely not. Absolutely not. I just care about the market. About the technical picture. That's all I care about.
Okay, well, I think that's a good lesson for everybody out there that if you allow yourself to be distracted by all the the reasons to sell, rather than focusing in on the market, you might end up in trouble. So let's talk a little bit, I guess, about the overall picture of the spies. Do you want to bring up your charts?
Yeah, I just did.
Okay.
So let me share
I think
the
you need,
screen.
yeah, hit present. Yeah, so we're gonna get into what some of the ideas Sami's been looking at. He had a big call on BITO, the Bitcoin ETF. We will get into that. Bitcoin's been a big topic, and also, guys, if you were on this stream, I believe it was 3 weeks ago, Sami gave Coinbase as a long, and I think it's just about doubled since then. So, Sami, let's talk a bit about the picture. All right, we could talk about Coinbase. What's going on with Coinbase since it's on the screen?
Just as a reminder, at the time, you asked me, I think, or somebody in the comments asked if I liked it more than Bitcoin. And I said, I actually do, because it's more volatile than Bitcoin. And that was when it was at 121 or so. Okay. Anyways, here's the picture of the SPY. Here's the picture of the Qs, which is the tracking ETF for the NASDAQ 100, the top 100 companies in the NASDAQ. What we see is a steady grind up. This type of a trend, never bet against it, and always try to be as fully invested as possible when the market is just grinding up like this. 45-degree, rising 20 MA, price above it. That's a beauty. That's a textbook uptrend. Now, if it starts to accelerate, if it starts to move away from the moving average and starts to speed up, then it becomes a little bit tricky, because then you can top out at any moment. If we start to look like this, you see, while the market is or in this case, while the stock is moving up, if close to the 20, no problem. But when it starts to look like this becomes more of a short, or ANF, right? As long as it's hugging, I'm short the ANF, just FYI. As long as it's hugging the moving average, this can last forever. ANF is a good example of that. When I say last forever, it gapped up on earnings at $20 or so. You see 22, right? And it went to 140. Who would have thought? This is Abercrombie and Fitch. This is not a biotech. This is not a technology stock. And it went from $20 to 120 nonstop, pretty much nonstop. And now maybe okay to short it, because it went far above the 20 and accelerated. Okay to get out of it as a long, which I wasn't in, or maybe go against it. So I'm looking at ANF short, potentially EME, potentially MLM. You see, as long as it's close to the 20, never go against it. Gets far from the 20, maybe, right? So that's what I'm, that's why I'm, you asked, why do you have so many positions? That's why, because the market is just, this is the time to be fully invested.
Okay, so funny you should bring up E. So Sammy, I actually own puts on EME. So, us geniuses, we think alike here. Okay, so is this basically a good rule of thumb for everybody out there that if it gets far extended above the 20 MA, it's time to think about getting out or get short?
Absolutely. It's definitely time to get out, but potentially time to also go against the trend. This is the only time that I look to go against the trend when it's climactic. When it's climactic, like HPK today was a pretty good climactic on the intraday. So it's like a waterfall. It goes, it fell off of a cliff. Okay, now you can look at fading it. But as long as it's in a tight, this is an earnings play. As long as it's in a tight downtrend, even if it's down, I mean, the MEI was down 35% last time I looked at it. Now, yeah, it's still 35, 36. So even if it's down 35%, 40%, 60%, doesn't matter. It can keep going. But if it accelerates, then okay, then you want to either cover it or potentially look at flipping it.
Okay, why don't we look at so Sammy, BITO has been one of your biggest winners, and when we were talking offline just now, Sami told me he just took it off of the SST newsletter. So what's going on with Bitcoin?
So Bitcoin, just FYI, I called it long, and I said in the newsletter we'll be doubling the risk because it looks that good. I believe I called it over 18. Yeah, there it is. That little base. Let me zoom in a little bit so you can see it better. But there was a nice little base right here. I'd have to go back, I guess. Oops. Let's take a look. It's basically a nice little base right here, base breakout. But now I wasn't looking at BITO as a base breakout, and I said, oh, let's double the risk on it because it looks really good long term. I was looking at Bitcoin, the Bitcoin chart, and that's what looked really good, Bitcoin. Okay, so I called it long right here, and then I picked $29 as the target because if you look at the weekly chart, that's where it fell hard from. 29. This is showing 25, but it's at 30 something now, 31. So I picked 29. This is the area where it came in hard from. So that's the resistance area. Bitcoin is still going, and so I still have BITO, but technically speaking, it reached target, and it made basically 20 times the risk. Whatever was risked on it, it made 20 times that much, that amount. So that's so again, BITO just was a play on Bitcoin. Now people say, why are you in BITO? There's an expense ratio, it's not a free ETF. Well, I don't know if you guys are aware, but BITO actually pays 15% dividend. So since November 8th or so when I got in it until now, just yesterday actually, it paid another dividend. So this is the fourth time that I got a dividend distribution on it. Pays 15% dividend on top of tracking Bitcoin price. This is what I want to be in. I don't want to be in, ARK-B or, sure, this tracks Bitcoin and it's a free ETF, but this one pays dividend. So I like the BITO a lot. That's what it's my biggest position by far. And, it's up in the 6 digits now. So I'm thrilled about it.
Okay, so you talked about doubling up your risk in BITO. Is that against your rules?
Not in swing trading. In swing trading, I have a flexible risk. So I have the standard risk, and on long-term plays, because it's long-term, how many can you catch long-term? So on long-term plays, the standard is double the swing risk. So I just double up on the long-term plays, and this was a long-term play, so that's why.
Okay, so what conditions have to present themselves for you to say, to hell with it, we're going all in? Like, what has to happen?
It would have to look really, really good across the multiple time frames, but especially the monthly, the weekly. So we're talking about the large time frames. We're We're talking about potentially holding something long term. So those are the ones that you wanna, have decent size on, because oftentimes you don't, these don't come around all that often. When you find the stock that is, if you look at the Coinbase weekly, that's giving you like a picture perfect weekly buy setup, monthly transitioning. It dropped like 90% from 480, I think was the top. No, it's 430. It dropped to like $30. And here at this point now, you might say, wasn't it the better buy at $30 or whatever? That would have been just luck, trying to catch the bottom. But over here, it was transitioning. Over here, this is when I got it, transitioning. So yeah, and then you got the weekly buy setup, this weekly pullback. I mean, how often do these come around? They don't come around all that often. So when they come around, you want to take advantage of them, basically.
Okay, so again, so can we say on all time frames, when we're getting that pullback to the 20 and it starts curling up, that's when we need to pay attention, correct?
Correct. That's the transition breakout, basically. I can show you, let me show you a couple of examples of things that are transitioning. SWKS, notice that 20 is curling up. ARK, but ARK is slow because Tesla's been bearish, is transitioning, so that looks good. I can just look at my account and tell you what looks good here. Carvana, I have it, transitioning. Here's one that I love, Zillow. It just needs to take out 61. You see how the 20 is curling up and catching up with price? So the Zillow is still not late at all, over 61. Let's see, OKTA. I'm just, again, as soon as I look at my account, because I have a lot of these. You see how the 20 is curling up? So how did I play the OKTA? I actually missed it, meaning I wasn't in it, but then it reported earnings. And then the day before earnings, I got in it. I called it as an earnings play. And I said to keep it long term if one likes it. So now I'm in it from the prior to the gap. So from this day, the closing price of that day. FRPT is another one. It's coming in right now, but look at that monthly, that transition. Now they don't always work. I was in the Expedia, and then it crashed on me. I was in the pins. It transitioned, and then I had to get out of it. What else was I in that? I was in, actually, believe it or not, I was in Snowflake, transitioned, and then it crashed. So you get out of the ones that don't work, but the ones that work can double and triple and quadruple. So Hood, I'm in Hood. Look at that. It's just starting. But I mean, Hood, we got it on the daily buy setup. So in it from where did we get the Hood? So hold on just 1 second. Hood was before the gaps. Oh no, it was on the weekly buy setup. You see the weekly buy setup? Hood was very similar to Coinbase. So there's a lot of plays that are transitioning. Look at the Ericsson right now, the weekly buy setup, how pretty that looks. It's not a transition play, but it's a weekly buy setup. I'm in gold, AU. This is a transition on the monthly. And then IAG I'm in, transitioning on the monthly. And I'm in the HMY, but this is a weekly buy setup. HMY is actually the biggest one of the gold stocks. It's up $13,000 right now. So again, there's a lot of plays that are, once they start to transition, that's like my favorite pattern to play to play stocks long term. I'm in the TME. Look at the monthly chart that transitioned. A lot of the China stocks are transitioning on the monthly. Food is doing a monthly buy setup. So that's basically what I look to do, Mike. But you already know that.
Okay, well, we need to educate the masses out there, because everyone, we should be honored to bask in Sami's wisdom. So okay, so yesterday, Sami and I were talking because I said to him, the NYCB, which was, they had, it's one of the regional banks that's been falling apart. It hit 170 intraday yesterday, and I was talking to Sami, and he's like, "Oh, I bought it at 178, and then it gaps up and like doubles in minutes." So what So, how did you have the guts, basically, to say I'm buying this?
No problem at all. Let me see if I can go back to it. Here it is. I don't use TC2000 for intraday trading at all. So I just use it for swing trading on the weekend. But I can't broadcast my intraday platform because it has a lot of charts, and I can only project one window at a time. So
If you Sammy, if you give me like 2 seconds, I can pull up an intraday on NYCB.
yeah, I mean, this is it basically. But over here, it's not very good because it's showing you that you see the halts. It's showing you as though it was a real bar, but those are not real bars. It was just dropping, and was going vertical, just like I showed you on the HPK today. So it was going vertical. So I jumped in only 2,000 shares. When it took out the last bar's high on the 1 minute. Maybe I should look at the 1 minute instead of the, But again, because of the halts, the chart is like messed up. These bases, those are not real bases at all. So I jumped in got 2,000 shares at 178, and then unfortunately it got halted. But I said, it's 2,000 shares, so halted, opened at 480, I believe, 480. So I looked at my account, or maybe 440. I looked at my account and it was up 40. Oh yeah, it was up $4,800. That's where I got 480 from. It's actually up $4,800 on on not even a $2,000. I mean, not even a $3,000-4,000 investment. But I tried to get out of it and it got halted again, and so I missed the top. But it was the best play that I took yesterday as a day trade. Now you might say, "Oh, you got lucky." I did. I got lucky, but guess what? I never tried to get it earlier because it wasn't looking good. Only when it went climactic did I get it, and then luck kind of works in your favor when goes your way when I think you're doing you're trading right. When you're doing things the right way, then people seem to get lucky. And I'm not saying I don't feel like a lucky guy, but I do notice that most of the time, the plays when I get lucky in any way, shape, or form, when like there is news or something like that, it goes actually in my favor most of the time. And it has nothing to do with luck. It has to do with being in the right stock at the right time, basically.
Okay, but were you nervous at all pulling the trigger, or were you just thinking I have 2,000 shares and if it goes to $1, it's not the end of the world?
Exactly. I only did 2,000 shares. So again, 2,000 times 178. I mean, I only put $3,500 in it, 3,560. So it's no big deal, even if it opened lower a little bit. Now, I don't think halting the stock is all that helpful. In general, I don't think it's a fair way to for people to get stuck in a position. Like, what if I was in a short and it opened way up? I wouldn't have been thrilled about it. So again, I don't like to see stocks get halted, but the fact that I just put $3,500 in it, it's no big deal. Even if it went to zero, I mean, I wouldn't want it to go to zero, but I'm just saying, even if it went to zero, it's not the end of the world.
Okay. But so when you put on the trade, did you have any specific expectations for where it could go, or was it just, if it's going to go, it's going to go?
Yeah, it had plenty of room to move up, but I didn't. It's like the HPK, plenty of room to move up, right? You have some idea on the intraday where the stock should stop at, like the resistance over here, and it actually went through it a little bit. So of course, I have an idea, but I didn't know it was going to get halted. So I got lucky in the sense that it got halted and opened way higher than I expected. But again, so you look for that waterfall pattern. The stock is dropping and then goes vertical. Then it's like a rubber band. It gets stretched a little bit. It doesn't generate much of a rebound. But if you stretch it really, really hard, then the rebound is going to be very hard too. So that's the climactic buy, climactic sell setup pattern, which is the only time that I go against the trend, actually.
Okay, all right, let's shift gears to some of the other. I guess we'll cover three more of the fun topics of the day, and then we'll get to something awesome you can get for Sami for totally free. We're not going to try to sell you anything. We have something free for you if you hang on for a little bit. So you talked a little bit about gold before. So it seems like gold, it's been underperforming for 6,000 years, and now it's finally, it feels like it might be having its moment. So what are you seeing with gold?
So here's what happened with GLD. I just want to tell you exactly what happened. I got in it on this hourly breakout. This is the hourly chart on this day. I got in it on this day. But guess what? GLD is pretty expensive. So since I have so many positions and a few of them are well over 100,000. When I say so many positions, just so you guys know, I have well over 50. In fact, well over 60. Okay? I don't know the exact number, but it's well over 60 positions. So I got in GLD on the hourly breakout, and then I decided to let it go. But a couple of days later, or it might have been even the very next day, some of the positions trailed out. So this is when I got in it on that hourly breakout, but it's on the hourly chart. Okay, this day. A couple of days later, I had some more buying power that I felt comfortable pulling the trigger on the GLD. So I called it in the newsletter, in this Strategic Swing Trader newsletter, long over the SPARS high. Stop under it, and it gapped just above, so by like 50 cents. So the order never filled. So for example, today I'll tell you VTYX. So I called it also swing long today. Notice how it gapped above the entry. So the entry was at over 940, I believe, the SPARS high. That's 940. So it gapped above the entry, but then it pulled back and it filled on the pullback. Perfect, right? So, but the GLD didn't pull back at all. It just gapped over the entry that day and took off. So I never got it, but I had the HMY. I called the HMY long because it's a weekly buy setup. So check out the weekly, picture perfect. Okay. And I like the IAG. Notice the transition on the weekly chart. That's the weekly time frame. It's the same curling, right? And then I also liked the AU, which was also transitioning on the weekly. So I ended up with the AU, the HMY, and the IAG. But I ended up missing out on the GLD, which is okay. I mean, it's all right. I'm not gonna be able to catch them all, but I have some three nice winners. The HMY, because the stop was very tight, it's up the most by far. It's up $13,100.
Okay, all right. How about let's go over to Biotech. Biotech's another one that's been getting back up there. What do you see in Biotech?
So Biotech, I have a bunch of Biotech stocks, but I don't really have the ETF. What's the ETF? Is it BK?
XBI.
Oh, XBI. Yeah. So it's been nice. So Biotech stocks are very volatile, but I kind of missed out on the move up. If we get a base in XBI over the next couple of months, notice that 20 MA. So then we will have another breakout. But I don't have like the ETF. I just have a bunch of Biotech stocks because they look good. In fact, this triggered yesterday, but it's pharmaceutical more than Biotech on the daily chart. Moderna triggered just yesterday, so it's not too late. That's why I'm mentioning it.
Okay, we'll get to our final topic, and then, folks, we're going to tell you how you can get Sami's technical analysis guide for free. Yes, free after one more. So let's close it out with IWM, because again, like a lot of small caps have been outperforming for about the last month or so. So what do you see happening with IWM? At a glance, I like it, but tell me if I'm wrong.
Yeah, no, you're right. Notice how it broke down here, and then you got a breakdown failure. And now the 20 MA is curling and pointing up. It looks good. Should be higher to the all-time high, I would say, to 240. So I like it. I'm heavily invested in ARC because it has a lot more room than the IWM. But, ARC is mostly basically like the IWM. It has a lot of small cap tech stocks. So whether the IWM or ARC, I like ARC because it has a lot more room. But yeah, IWM looks good. I'm invested in it also in my 401k. the IWM. So I like it a lot, Mike.
Okay, folks. All right, you heard. So Sami likes IWM. Remember that we will bring it up next week. We will hold Sami accountable. So come back next week and we will hold his feet to the fire if he's wrong. So guys, you can get Sami's ebook, Unsexy Trend Analysis Secrets That Generate Beautiful Profits, t3live.com/SA, t3live.com/A. If you are watching this on Twitter, you will see that link in the tweet. If you're watching on Facebook, YouTube, or LinkedIn, the link is in the description, t3live.com/SA, and you can learn Sami's the basics of the system for free. So Sami, thank you for joining us. Thank you for sharing all these awesome ideas with you. Have a wonderful day.
Thanks. You too. Take care, Mike. Take care, everybody.
Okay, thank you guys. Thanks for coming out.